Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. Here's the disclaimer. And
Just, I had a thought when a buddy of mine sent me a picture from last night. And have you ever seen the Starlink satellites whenever you've been outside at night go overhead?
no, I don't think I've ever seen that.
So it's a string. It looks like a string of lights in the sky going by.
Really?
And you wonder what it is, and you immediately look on social media, and people, oh, that's the Starlink satellites. And it just occurred to me that he should add like satellites in the opposite direction. So you have the line going down, and if you just made a T out of them, you have these T of lights just going around the planet.
That's right. Do you have a picture of it?
I do. I don't have it on me now, but it's amazing because a friend of mine, I saw it twice this summer, once at the beach and once at the first time we saw it, we were all freaked out. We were by the pool. We're like, what is that? Oh my God, is it a UFO? And a buddy of mine last night was fishing on the Delaware River, and he sent me a picture. He's like, what do you think that is? And I said it's Starlink satellites.
I don't think I've ever seen
it's a UFO. And sure enough, he looked, and everyone was saying Starlink satellites. So
I live in a city, so I don't know if because of all the lights here, I probably won't notice it.
Yeah, the city light would definitely drown it out, but it's interesting when it goes by. And for whatever reason, I was thinking about it because he texted me, and I was looking at my text this morning, and it would be cool if he had put a string of satellites in the other direction. This T would be going around.
Yeah,
planet.
We'll share a picture. I'd like to see that.
I will. I'll look for it. All right, cool. Let's get going.
All right, let me share my screen. And as I'm doing this, if you're new to the show or first time coming on this show, Will and I, we do this show in the morning to try to help answer questions you may have about Market Chameleon tools, the data, the analytics. If you have a question, you can put the question into the live chat on YouTube. Will's watching it. He'll read the questions back to me. If you want to come on a show and ask your question live, we also provide a link to Zoom. You could click on that link. Once you log into Zoom, there's a button, raise your hand. Click on that, lets us know you have a question. Once we let you in, you could ask your question live and direct. And to give you guys a couple minutes to put in the questions and allow some time for more people to join us, we'll start out taking a look at the pre-market report to see what's trading in pre-market hours, see if we could get some insights, and then we'll move on to the questions. All right, so pre-market report, these are stocks trading in a pre-market hours right now. I'm going to come down here, and we have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. We got 36 stocks that made our percentage gainers list, 130 on our decliners. So from this perspective, right now, the trading in the pre-market hours looks like it's lining up with some bearish sentiment. And I believe we had a jobs number come out today. It was a big number, anticipating, people are looking at that jobs number as what this Fed may do with the interest rates going forward. If the interest rates so far, are they having some impact on slowing down the economy? Because that's what they're aiming to do, slow down the economy, slow down spending to get that inflation back to their 2% target. So far, we see what's going on in pre-market hours. I guess that now the market's looking at it that the Fed still has, based on these numbers, Fed still has more work to do to slow down the economy. I'm going to come up here to look at it from another perspective, what's going on in the pre-market hours. And we have this calendar view top. You could go back days to see what happened those days in the pre-market. And right now we're October 6th. That's today here. We see so far 254 stocks are trading higher in the pre-market hours, 468 stocks trading lower. If we look at the volume, number of shares, 105 million shares are trading on up volume versus 77.8 million on down volume. If we convert those shares to dollar value, because there are stocks, in there that could be a couple pennies, there's stocks in there in the hundreds of dollars. So if we convert the volume to dollar value, we see $825 million worth of stock trading higher, $4.8 billion worth of stock trading lower. So this also confirms that the trading in the pre-market hours right now has some bearish sentiment in that session. So let's come down here and look at one more perspective, and then we'll move on to the questions. If we come back down to this list, we see that stocks on this list, there are leveraged products in here. We have small cap stocks. We could have a preferred stock, closed end, pretty much any security listed on a major US exchange. If it's trading in pre-market hours and meets our thresholds and our conditions with liquidity, volume, price changes, all that, it can make this list. So to narrow it down to a small group of stocks, we could use the filters here above. If you have a watch list, you could filter by your watch list. I'm going to use this filter in ETF. We're going to click on it. We get a list of ETFs to choose from. The top ones are broad-based ETFs. Then you got sector ETFs. And when you click on it, we'll do this one, SPY. The filter, the list below gets filtered by stocks that are holdings in that ETF. So SPY, that's the S&P 500 ETF. These are the S&P 500 constituents. We see 3 stocks made our percentage gainers list, 38 on the decliners. So that also indicates that, the traders in a pre-market hour are, overwhelmingly look like they're lining up from the bear side. So far, the only one, I think PXD, that's a takeover, right? Exxon, I think, is bidding for them, I believe.
Yeah.
So that's the only one that kind of sticks out. So at least there's like a deal out there, right? People are finding that certain companies are still worth, at these valuations, buying and merging. So I guess we gave it a couple minutes. Well, if you have any questions, I'll take them now.
Nothing pops up.
Okay.
If I wanted to see how the market has moved over the last, we had such a rally in, seems like the market off its lows, but if I wanted to look back over the last year and see what really rallied, how would I do that?
You mean
where the move in the market was off the October of last year lows? Because it feels like a lot of stocks I have in my portfolio are still not up or still down. But like, I know Meta, Tesla.
Yeah,
there's some
like
stocks
you mean like an S&P 500.
Yeah. How do you look at that?
So let's just so let's take SPY as S&P 500. And one of the ways we could do it is take a look at their holdings and see how those stocks, members of the SPY, performed over a certain time period. And I'm going to go here, ETF, and here are the holdings. So now we see, Apple, Microsoft, Amazon, these are sorted by highest market cap. These are all, the holdings in the S&P 500. So you could go back, look through them. And one of the ways we could look at what, the best performers, worst performers, is we could sort by these columns, and these look at performance over a certain time period. Here's a 2-week period, 3 months, 6 months, 1 year. And because they're sorted right now by highest market cap, we could see how the big caps did, right? So Apple up almost 20%, Microsoft 28% in the same time period. Amazon up 4%, NVIDIA up 283%, Google 33%, Tesla 8%, Meta 119%. So, which it kind of like looking at it, over years basis, I would have thought like the Tesla would have been up there more than Apple, Microsoft, but Meta really was one of the bigger ones. Nvidia and Google you see there. So what if we just wanted to see the best performer, right? So we could just sort by this. So these are the best ones: Nvidia, Copart, Meta, Royal Caribbean, Fair Isaac, Carnival. So these are sorted by best on a 1 year basis, and we could just go the other way. These are the worst, Dollar, and Face Energy. Here goes some of these other ones. So that's a quick way. We could do the same thing the last 3 months. Let's sort it this way. If we wanted to actually look at it with more filters, we could do it from the stock screener. So let's go to the stock screener. And let's say we wanted to add more filters to the S&P 500. So right now I'm on the stock screener. This has it has all the stocks in here, and we got all these different tabs with data, metrics. So the first thing, let's go into this filter in ETF and select S&P 500 stocks. So now we have the S&P 500 stocks in here, and let's say we just wanted a count of S&P 500 stocks that are here. Let's go to the technical, right? Let's say maybe the price. Let's go to the technical. So let's say we wanted to count how many are trading above their 50-day moving average, how many are trading below, right? Just to see in S&P 500. So I'm going to go over here, price and volume, and here's the 50-day moving average. And let's see how many are trading, I don't know, at least 2% above its 50-day moving average. Click on that. All right. So now we see that there are 29 stocks, right? So these are the first 25. These are the next. There are only 29 stocks in the S&P 500 trading above their 50-day moving average, which is surprising because the S&P 500, it's not that far away from its, high, not, but that's showing that the majority, right, are trading them below the 52. Let's just make sure. So, well, this is 2%. Let's look at anything above 52. It doesn't have to be by 2%. So 61 stocks out of the S&P 500,
like a little more than 10%.
Yeah, are trading above their 50-day moving average. And these are. Let's look at the longer term. Let's look at the 250-day. All right, let's let go of the 50. Let's look at 250-day. So let's again give it 2% above its 50-day. So now I'm looking at 2% above the 250-day moving average. Here we got 169. So here's the 250-day moving average. So you can see CPRT is trading 98% above it. WDC. Let's sort this by let's sort it by market cap. So these are by market cap. So I'm going to come back here. What was under technical? So you can see Apple is trading 7.7% above, Microsoft 11.8, Google 23.8% above it, Nvidia 54% above its 252-day, Tesla 26%. So there you have, the high cap stocks look mostly, I can't think of which one's missing. Maybe Netflix. Which are the ones that are missing here?
It looks like Netflix isn't there.
Maybe Netflix and Amazon.
Amazon isn't there, correct?
Yeah. So this kind of gives you an indication how the rally is it's how it's distributed. Is it equally spread out? Is everything going up, or is it getting pulled up by smaller and smaller amount of securities? So let's take a look at, let's look at any, right? This 2%, let's just say anything above. So on 189 stocks out of the S&P 500 are sitting above their 250-day moving average. That shows you, that the majority of it are below, right? The majority of the S&P 500 are below their 250-day moving average. So these are below. Exxon, J&J, Procter & Gamble, Home Depot, Merck, Pepsi, these are, some of the familiar names. What if we wanted to see how many are trading near the 52-week low, right? So let's just say they're trading within 2% of their 52-week low, right? Close to the 52-week low. So we got 62 stocks trading near their 52-week lows out of the S&P 500. Let's look at the other way then. Let's look at the high. What about near the high? Within 2%, we'll do the same thing. So 9 stocks right now are within 2% of their 52-week high. These are the 9. So how many did I say? It was 16 versus 9. So you can see the breadth of the market is indicating a much more bearish tone than like what the S&P 500, is doing so far. The breadth of the market is looking like, more and more of the companies are more in a bearish.
Yeah, if you wonder if there is a and we use the technical term whoosh, but a big where the bids just disappear, right? And some people have to sell.
Yeah,
they refer to it as throwing the baby out with the bathwater, right?
Right.
Like who's buying these? As Rob said, it's the Magnificent Seven. These Google, Netflix, Amazon, Meta, Microsoft, Nvidia, Tesla. Who's buying them when the market? If the market, I'm saying, I say when, I shouldn't say when. I said if the market ever, has a dramatic drop, because a lot of these stocks have already been shaken out, right?
Yeah. Well, you're like moving in and out. I can't hear your voice. Maybe.
Oh, sorry about that.
Yeah. No, it's a good point where you got the Magnificent Seven, Apple, Microsoft, and all these companies cannot just do well on their own if the entire economy is just doing poorly, and because they rely on customers. They need customers, they need consumers, they need consumption. So they still need people out there spending money, buying their products, leasing their, if companies are going out of business, if companies have to cut back, well, they're going to be cutting back on services and goods, and that starts to spill over, right? Are you going to, be buying as much of any product, so I don't think that they're completely immune. I don't think digital advertising is immune to a downturn in the economy. I don't think, some of these other services that they sell are going to be completely immune to a economic downturn. But so far it's a very crowded trade, like those Magnificent Seven. I think what has happened is that our IPO market has like shut down, right? We don't have any new companies really IPOing. We don't have a big supply of stock out there, and the buybacks take stock out, and the investors are now flooding to those high tech companies as the safer investments. And they pulled it up, right? They represent a bigger market cap, so they have been pulling up the averages. They've been pulling up the indexes for sure. We could compare it here. Let's just see in a chart. This is SPY. Let's look at a 1-year chart, and here's SPY returns. It's been going up, coming back in, but let's compare it to like the Russell 2000, right? Which is 2,000 of the smaller caps. So you could see right around March, that's where the divergence started, right? Like they were kind of mimicking each other, and then all of a sudden you see this divergence between the large cap and small cap, which is showing you what may be happening in the smaller companies, what may be happening in those companies that are like not in these monopolistic positions. There's a divergence, right? These are starting to hurt. They're already in the negative, right? Is that what I'm seeing? Is IWM right now in the negative for the year?
Looks that way.
So that's what it looks to me like. It just went into negative territory on a 1-year basis. This is S&P 5. Let's do the QQQ, right? Is the QQQ's tech heavy? So let's just look at that. So look at QQQ. That even diverged more from the S&P 500. So you could see that those tech heavy, so that blue line, the blue line is the S&P 500. The yellow line is QQQ. The red line is IWM Russell 2000.
Now overlay one of those Magnificent Seven.
Like which one? The
Microsoft or Apple or Nvidia.
So Microsoft, you see, it's like the QQQ kind of. But here and this blue line, by the way, the S&P 500 contains a lot of those stocks in the QQQ, right? Like, Microsoft, Apple, Meta, they're all also in the S&P 500. That's why it's getting pulled. It's holding up. It's that Magnificent Seven. Those big tech companies are, right. Let's do this. Let's go to QQQ. QQQ is the top 100 tech companies, right? That was the NASDAQ 100. If we look at the profile, here are the top 10 holdings. The top 10 holdings out of 100, right? Top 10 holdings out of 100. So these are 10% of the QQQ. They represent 49%. Actually, it's probably more because Google has 2 classes of shares. So it's in there twice. You can see Google's like 6% alone of this. So it's over 50%, right? Because Google's double counted. So over 50%, there should be one more company in there. Over 50% of the NASDAQ 100 are just 10 companies. That's how concentrated right now the investments are. They're all flooding to these tech heavy, top heavy stocks. And the rest of it, if we just divide them up into like sectors and small caps, mid caps, and let's look at the mid caps. All right. What is a mid cap? MDY?
Yep.
So here's MDY. Let's see how that. So MDY, we'll do the same thing. Chart, right? So on a 1-year basis, let's do verse SPY. So MDY is in the blue, right? That's in the blue. S&P 500, it's in the red. And you could see that right around here in March, mid-cap started out actually outperforming. In March, they crossed, and you see that the S&P 500 has been widening, the performance has been widening out. Not as much as like the Russell, right? But you could see that the performance between the two, the spread is widening out. And it could indicate, what's happening in the broader economy that maybe is not being felt yet in Silicon Valley and in the high tech space.
Very interesting, D. We did have a question. Maybe we can hit it on Monday if you don't want to get to it now, or right near the opening. Jackie was asking, what is the difference between seasonality and drift?
Yeah. So a seasonality would be you're looking for a pattern of behavior around certain calendar days, right, of the year. It could be, a seasonality in just the month of December. It could be a seasonality based on like maybe in the summer months. It could be a seasonality based on, certain calendar days that an event happens. So you'd be comparing the same calendar days, right? The same calendar days year over year, right? So maybe you want to see what happens during the week of Thanksgiving, right? So you would set it up and say, show me the week of Thanksgiving this year, the week of Thanksgiving last year, the week of Thanksgiving. So you're always matching up the same calendar days year over year to see if there's a pattern there that shows up that is different from, any other regular, week or month or whatever. So that would be, a seasonality. The drift we're looking at is what is out of any given, period. Let's say 30 days, 20 days. It doesn't matter if we're going back over a certain period that just it's in time, right? So it doesn't matter which time. It could be, the recent 20 days versus the previous 20 days versus the previous 20 days versus the previous 20 days, right? We're looking at a return given the amount of time that went by, and does this stock tend to drift over an extended period, right? Like so if we obviously, like, a stock can move much more in 20 days than it can in a second, right? And it could move more in an hour than it can in a minute. So if we expand the time, right, and then we compare time frames, right, just long term, it could be year over year over year, it could be, month over month over month, going that way. What does the stock tend to do? Is there some kind of drift over time, pulling it? Is there some kind of volatility, some kind of, so that's the difference between just a drift versus a seasonality, which is a seasonality would be like, here's a seasonality month, right? We're comparing January versus January, right? So you're comparing the same calendar days. So that would be a seasonality. Is there something going on, for example, in September that's different than the rest of the months? Like, why is September why does September seem to be like there are more down months in September than there are in any other month, right? Is that like some kind of seasonal pull? Are there less people, are there people after the summer, selling stocks, or is there less money coming in from pension funds and mutual funds or whatever? But why is there like this seasonal pattern? We'd have to figure it out. But the data shows that you could see that, there's something going on in September that we don't see in any of the other months, right? That would be kind of like what a seasonality would try to point out.
That's awesome, D. We're right up against the open, and I was going to show something real quick. People were asking about the satellites. That's
Okay.
what they look like from
Oh,
land.
wow.
So
yeah, it does look like look, if I saw that, I would also wonder what is that, usually don't see it that way.
Yeah, it's pretty interesting. But anyways, everyone have a great day. Awesome job, Dima, as always.
Okay. Everyone, thanks for joining. Stay safe out there. Have a great trading day. Have a great weekend, and hope to see you guys on Monday.
Trade in peace, chameleons. Have